We spend a lot of time talking about the future of Canada's economy, the future of Canadian business, the environment for investing in Canada, how businesses around the world think about investing in the story of Canada. And we wanted to bring in somebody who can weigh in on all of these subjects. Waleed Solomon is a notable Bay Street lawyer. He is global chair of Norton Rose Fulbright, and he joins me here in studio. Nice to see you.
Good to see you. Thanks for having me.
You do have your fingers on the pulse of Canadian business. I guess starting with the state of business right now, because everybody's got an opinion on that. Where do you stand? What would you say you're seeing?
I'll tell you, I first became the global chair of Norton Rose in 2018. And I took the role back over this year in 2024. And we have offices in 52 cities around the world. And I have to tell you, quite sadly, there has been a dramatic difference between just 2019 and 2024 with how Canada is viewed from an economic perspective around the world, the relevance of Canada, the relevance of our capital markets, the importance of being listed on the Toronto Stock Exchange. That has been the most dramatic observation I've had this year, and it's quite worrying for me.
What is the message, the overarching message?
The overriding message is that we are just not relevant. And it is a real problem. And I think, policymakers and senior business executives in this country really need to be thinking about where is it that we stand as a nation in a world where the middle class is growing, where places like India, places like Central America, places like Dubai, Singapore, Hong Kong, are not only exceeding their expectations, they're maturing as economies and places to invest, and places where their capital markets are beginning to become quite important around the world. That's something that we need to worry about, John.
So you're talking about demographics in other jurisdictions, but are there other issues about how we're operating our economy that are worthy of discussion?
Well, let's talk about mining financing. Anybody who's been on Bay Street for 20 years will tell you that this was the most important stop for anybody building a mine or starting an exploration project anywhere in the world. There were 15, 20 banks that they were knocking on doors of. That capital is still there. That capital is still here in Canada, but we are not the number one stop for those junior mining companies and exploration companies around the world. Tech companies are also not starting here in Toronto. Some of them are making a stop here in Toronto, but we are no longer a must attend to destination. This is causing me great concern. I think it's something that both policymakers and members of the business community need to be thinking about and addressing very carefully.
What would be some of your solutions?
Well, as a starting point, I think we need to be taking a look at everything from the macro environment that we have here in Canada, taxation. We obviously have seen the new capital gains tax regime which coming in, which I get all the arguments in favor. I totally get them. I understand that we need the money, but it is having a chill on the economy. To the micro, everything from red tape, regulatory, we need to appreciate we're 2% of the world economy. Getting listed on the TSX, what it means to have continuous disclosure and what those requirements are, might not be able to be the gold standard around the world. We need to supercharge our capital markets here so that this country and this city particularly continue to be a destination for capital markets participants, that we are able to have a relevant stock exchange, and that we're able to have a worthy capital markets for investors to participate in.
So what are the ramifications of not getting it right, in your opinion?
Well, I'll tell you, what's the next Barrick? What's the next I Am Gold? What's the next Shopify? That's where I'm really concerned, and that has an impact on everything from where the head office jobs are, whether we're going to continue to be a creative economy that's able to grow, and of course the service industry, like my law firm, that are associated with that.
Yeah, and your firm would also work on a more micro level on, shareholder activism campaigns, or M&A campaigns as well. And you talk about the relevance of the TSX. We also talk about sometimes our Canadian companies, our boardrooms, are they well equipped to deal with someone who comes to shake the tree? How should they react? Should they be ready to fight? Do we need to be ready for that so that we can maintain head offices in this country? What are you observing on that level as well?
Well, look, Norton Rose has had the privilege of being the top firm on the defense side as ranked by Bloomberg for several years now. We're very, very proud of that. So we're in boardrooms across this country. I can tell you there has not been a more active environment on what we call a contested and complex M&A and shareholder activism than we've seen in this period here for several years. Look, there's lots of very public stories out there. There are even more private ones. We are involved in probably at least half a dozen large ones across the country right now. My position and my advice to boards is really simple. Stand your ground if you believe your thesis. Don't be a pushover. Don't look at examples where folks have lost. Don't look at examples where folks have won and say, you know, I need to sort of follow the wind. Your job as a director is to ensure that the thesis that you've adopted and that management has put forward is implemented. Stay strong with it. And work hard on making sure that your shareholders are adequately communicated to. Most often it works out. Sometimes it doesn't, and that's okay.
You're talking at the end of the day about let's make an assumption that in some cases these are foreign investors or companies that are targeting Canadian companies that for whatever reason maybe they think they're underperforming. Is there a parallel with how we think about that trend with the one you talked about before, which is how do we ensure that we're attracting enough capital for the future?
Well, I'll tell you what I'm actually more concerned about on that front.
Sure.
is that that activity, hostile bids, proxy fights, are actually the signs of a vibrant capital markets. And we are seeing the effects of many decades of vibrant capital markets allowing the type of behavior we're seeing right now. When I look forward 10 or 15 years and think about, for example, the dearth of IPOs, the dearth of new companies that are large getting listed on the Toronto Stock Exchange, I do worry whether we're going to have that same level of activity 10 years from now. I don't know. Will I be sitting with you 10 years from now and talking to you about all the proxy fights and hostile bids going on? I hope I am.
Yeah.
But that is what we do today in our capital markets is what's going to impact that 10 years from now.